Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Thursday the 26th of September 2013. Well, it's been an interesting couple of days in the markets, largely because there are these US fiscal issues and two US events that are on the horizon that are dominating certainly market commentary, and that is for sure. The first one is whether or not the US will reach its budget deal in time for the new US fiscal year, which is Tuesday the 1st of October next week. So time really running out there, and it doesn't look like Congress is any closer to reaching a deal. Now, if they don't reach a deal, that could mean that non-essential public services in the US close down on Tuesday morning. That could play havoc with the unemployment figures. Remember, unemployment, very important for the US Federal Reserve and when they will start tapering. So a lot of uncertainty around that level, and that's really playing out, and I'll show you that in the dollar yen in a moment. The other thing, of course, is the US non-farm payrolls report next Friday. That's also a huge report because obviously the Fed didn't taper in September. Could this labour market report determine whether or not they taper in October? That's what the market is waiting to see. So what we've seen so far is the dollar really still struggle post that no-show tapering from the FOMC last week. Now, this is a cable chart in front of you. As you can see here, cable's still doing very well. It's still maintaining its gains around about that 160 level, but it did come out of some from that 165 high from earlier, and actually did manage to find a good bit of support at 160.40. The reason why was the third revision of, or the third reading of UK GDP for the second quarter. Normally not a big deal, but there were some big downward revisions for business investment. Now, if you don't have business investment, it makes it very difficult to get sustainable growth. Also, a contraction of 8.5% on an annual basis in business investment really supports the Bank of England's forward guidance. So what we saw was gilt yields come off, dragging the pound lower. We've also seen the sterling overnight swaps, which is a good way to measure interest rate expectations, actually pull back a little bit as well. So interest rate increases now just pulled back to that second quarter of 2015. Previously, they had been in the first quarter of 2015. So that's weighed on the pound. But again, whether or not we get a sharper sell-off and cable may actually come down to the US and its fiscal issues. If they really kick off next week and we do get that shut down, then we could see some safe haven flow into the dollar. And what that may mean for cable is that we get back down to those 158.40 lows. That's a key level of support. Is the base of the daily Ichimoku cloud, the monthly Ichimoku cloud, and we would expect that to act as very good support over the next few days. Now, the other chart I want to show you is dollar yen, also going to be very pivotal later on today when we get the third reading of the US GDP figures, but also it's going to be very important over the period of these US fiscal issues, over the period of the tussle to reach a budget over the next few days. And the reason why is that any kind of fear that the US is not going to be able to reach a deal could really weigh on treasury yields. This chart shows US treasury yields minus Japanese yields. As you can see, the spread very much not in favor of dollar yen at the moment, and that has really weighed on dollar yen. Now, we did have the Japan's public pension fund, the pension advisors. What they said was that Japan should really think about diversifying out of JGBs. Now, that's just weighed, caused a little bit of risk aversion. So the yen has gone up just a smidge today, and that's really pushed us back to that 50-day moving average at 98.60. 99.05 is capping the upside. That's a 100-day moving average. But overall, if we were to get a government shutdown, we could see pressure on dollar yen, because remember, the yen is also a bigger safe haven than the dollar, so it could drive inflow into the Japanese currency. But overall, a very interesting few days in the FX market, and please do join us next time for more. Thank you.